Do you want to turn 10 rupees into 50 rupees or a lakh into 5 lakhs immediately without taking any risk? Well, you can't. Now, before you start accusing me of misleading you, I think you'll be interested in something that I'm about to tell you now. The shares of a company called Electrosteel Steels Limited are trading on both NSE and BSE, but at totally different prices. As on 29th August 2018, each equity share of the company is trading at 50 rupees on BSE, whereas at 10 rupees on NSE. But why? My name is Narayana Murthy Puppala, and in this video, we are going to discuss why shares do not trade at significantly different prices on various stock exchanges. And even if they do so, why you may not be able to take advantage of this price arbitrage opportunity. During the CA final exams in May 2018, ICA asked a very interesting question in one of its elective papers, Financial Services and Capital Markets. The question is as follows. Will the equity share prices of a company be the same in both BSE and NSE at the same point in time? If so, explain the concept. If not, explain why they could differ. If they differ, will an investor not be able to profit by buying at a lower price and simultaneously selling it at a higher price? Now, the answer suggested by ICA is crisp and to the point, but it's not very explanatory and it doesn't give you the full picture. So for your understanding, I'll explain the concept comprehensively in a step-by-step manner. So let's get started. The stock exchange is a platform through which buyers and sellers conduct transactions. Therefore, NSE and BSE, the two largest stock exchanges in India, are two distinct marketplaces at which you can either buy or sell shares. In each exchange, the share price keeps fluctuating, sometimes in a fraction of a second. The share price keeps changing based on the demand and supply for these equity shares in each individual market. Therefore, there is a possibility that the share prices could be different in these markets. Now the question is, can you buy the shares at a lower price in one exchange and simultaneously sell the shares in another exchange at a higher price and earn the riskless profit? Let's try to understand this concept with three different cases. Case 1, an insignificant one-time price difference. Case 2, a significant one-time price difference. Case 3, a significant and sustained price difference. Case 1, an insignificant one-time price difference. Whenever you buy or sell shares, you need to pay various taxes and fee in the form of brokerage, securities transaction tax, exchange transaction charges, SEBI turnover fee, and stamp duty. All of this, when put together, may add up to 0.15% to 0.5% of the total transaction value. Therefore, the total taxes and charges may exceed the arbitrage profit that you may earn because of the price difference. Hence, you may not even attempt a trade in the very first place. Case 2, a significant one-time price difference. What if the price difference is so high that it exceeds the taxes and charges put together? We should be able to earn profit after deducting the expenses, right? No. But why? Let's try to understand the process first. It is common knowledge that shares are usually held in an electronic form in a demat account. Whenever you buy shares, whether on NSE or BSE, the number of shares in your demat account increases, and whenever you sell them, the number decreases. But are the trades reflected immediately after the transaction in your demat account? The answer is no. There's a concept called rolling settlement, and both NSE and BSE follow T+2 settlement cycle. What does it mean? Let's say you bought the shares on Monday, the transaction day. It means that the shares get credited to your demat account not immediately but after 2 working days, that is by Wednesday evening. But the person who sold the shares to you should deliver the shares latest by Wednesday morning. So the clearing house will be holding the shares from Wednesday morning to Wednesday evening. So what happens when you buy and sell the shares simultaneously on 2 different exchanges? Let's say you're buying on NSE and selling on BSE simultaneously on Monday. Remember, you can use the same demat account for both NSE and BSE. The shares you sold on BSE must be delivered by you by Wednesday morning, but the shares you bought on NSE will be delivered to you by Wednesday evening. But by Wednesday morning, you don't have any shares in your demat account because you will receive the shares you bought only by the evening. So it leads to a situation called short delivery, and you will have to face the consequences. Your stockbroker usually doesn't want to see you in trouble. Therefore, most of them will not allow you to short sell, the only exception being an intraday trade. In case of an intraday trade, you can short sell the shares first and then buy the shares on the same exchange on the same day. You will not face any problems because you are squaring off the trade on the same exchange. Does it mean that you can't earn arbitrage profit at all? You still can. But that happens only in the case when you are already having shares in your demat account or through a stock lending scheme. And it is for this exact reason there may not be any significant difference in the price between the two exchanges, because whenever there is a difference, the arbitrageurs get into action and bring down the price difference. Now let's look at case 3, a significant and sustained price difference, that is, difference in the price lasts for a long time. This case is not very important from an academic perspective, but as a future finance professional, you should be equipped with practical knowledge too. This could get a little technical, so brace yourselves. Take the case of Electrosteel Steels Limited. There is a huge difference in the price of the shares trading in NSE and BSE. And it's not a one-time difference, but it has been happening for at least 2 months, and it's still happening by the end of August 2018. So, why don't we buy the shares on NSE at a lower price on Monday, get the shares credited to our demat account on Wednesday, and then sell the shares at a much higher price on BSE? It looks like it's a very easy way to make lots of money, isn't it? No. I think we should first learn a little more about this company. Electrosteel Steels Limited, listed on both NSE and BSE, have incurred huge losses right from the start. It could not pay its lenders and accumulated piles of debt. State Bank of India, one of its largest lenders, initiated insolvency proceedings against this company in June 2017 under the Insolvency and Bankruptcy Code. A resolution professional has been appointed and the creditors took over the company. Among the several proposals received, the creditors accepted Vedanta's bid, but it also meant that the company should go through an internal reconstruction or capital reduction process.
Electrosteel Steels will soon be a Vedanta Group company. The Kolkata NCLT cleared Anil Agarwal's 5,000 crore proposal for the stressed steel company.
Both NSE and BSE suspended trading in this company's shares during this process from 11th June 2018 till 18th June 2018. The shares started trading again on 19th June. But because of the major changes that have happened during the previous week, the share prices fluctuated very violently during the opening moments of the market. And finally, in the process of price discovery, the opening price came to 1.4 on NSE but 13.12 on BSE. Before anyone could notice the price difference and act upon it, the shares have already hit the upper circuit limits and the trading stopped for the day. The shares continued to hit the upper circuits of 5% in both the exchanges in every trading session till 8th August. On 8th August, the price has touched a high of 74.4 rupees on BSE, whereas on NSE it got up to 5.55 rupees. As on 29th August, each share is trading on BSE at 50 and on NSE at 10. Now, because of the price difference, the shares continue to hit the upper circuit on NSE, trying to catch up with the price on BSE, whereas on BSE, the shares trade with normal volatility. On BSE, there are both buyers and sellers of the shares, whereas on NSE, there are only buyers without any sellers. So, even if you want to buy the shares on NSE, you will most probably not find any seller on NSE, because a shareholder is free to sell the shares either on NSE or BSE. So, a shareholder would rather sell the shares on BSE at a higher price than on NSE at a lower price. What's the conclusion? It's very rare, difficult, and almost impractical for you to take advantage of the price arbitrage opportunity. But With the introduction of insolvency and bankruptcy code, this could just be the beginning of more and more such price arbitrage situations. So keep an eye on them. I hope you understood the concept. If you're not aware of the concepts of rolling settlement or circuit filters, I request you to learn these topics first. For better context, I request you to go through the suggested answer of ICAI. Please like and share this video. To get more updates on finance, capital markets and CA course in general, please subscribe to our channel Catalyst. Stay curious.